7.5% positive performance for July, bringing us to around 10% for the year, which is about an 11% outperformance versus our benchmark, the MSCI World. Over the month, there was about a 2% outperformance versus our benchmark, and it's all based on stock selection. The top contributors for the month have been AMD, Nvidia, Tesla, Alibaba, and also Qualcomm. AMD was up 50% for the month, and it was mainly because Intel announced that their new 7nm chip would be delayed into 2022, really giving a boost to its competitor. So that lifted the stock quite heavily. Tesla was up 30 to 35% for the month because profits were significantly higher than the market expected, and revenues also beat. So we often get asked this question, how does the Singularity Fund look versus tech indices? And really comparing apples with apples, and we carve out the tech part of the Singularity Fund and compare that with the tech sector. In this case, we have a nice outperformance of around 10% since inception. And what's also interesting to add is that since we rebalanced the Singularity Index, we have actually outperformed the Nasdaq indices despite having a lot less tech and communication services in the fund. So by now, 3/4 of the companies in our portfolio have reported Q2 results. Of these, more than 90% have beat on earnings, and more than 75% have beat on revenues. Year over year, Q2 earnings were up by roughly 25%, and year over year revenues have been flat for the second quarter, kind of showing that the companies in the portfolio have been quite resilient in the COVID-19 sell-off. So we talked about this in last month as well. A lot of investors are waiting and have been waiting for a double dip. And maybe that is precisely why we have not seen a double dip. It shows particularly when we look at equity positioning of investors. Equity positioning is still about one standard deviation below the mean, and cash positions by the same token are about one standard deviation above the mean. So there seems to be a lot of cash on the sideline, and every time we kind of get a bit of a correction, that props up the markets. Yeah, I guess with market sentiment, investors also have become more courageous, and we have actually seen net inflows into the fund.